Year 2023 has come to an end, and yes, crude oil has closed the year in a negative note with a drop of 10%. Yes, it has erased 10% of its worth as the year started at around $80 levels and it is closed at around 71.4. Now, yes, it has contributed to the max towards the dropping and falling inflation. Now, what to expect in the year 2024? Can we expect oil to reach the lows at around 60 and below levels? Or is it going to bounce back? Is it going to stay bullish and stay in this upward trending channel? Which position you should take? What to expect from oil in the year 2024 in the month of January and in the next week? We will see with the help of charts and indicators. If you're new to the channel, subscribe to the channel. Do like, share, and comment. I do share twice a day update on crude oil. Do watch both, and towards the end of this update, I will share the trading levels and strategy for the next week and for the month of January. Do watch till the end. Also, I will give you my long-term analysis for the year 2024. Let's start. First, let's have a look at the chart. See, certainly there is a base which has been created with that is bottom at around 67, 65 zone. We have seen oil retracing upwards towards 95. Now, higher lows are done, and possibly in the coming week and in the month of January, we can expect oil to start the upward journey again. Yes, it can continue to trade in this upward trending channel where the highs of this channel for the year 2024 is going to get limited here somewhere around upwards to $100. Possibility is there as long as it stays above $65 levels. We can expect prices to stay bullish and prices to stay upwards on the upside towards $100 levels. Now, if you look at the movement, see a flat top is seen, and since then 3 red candles are done. Each candle has left a tail on the upside, and in the month of January, if the prices moves about $77, $78 levels, certainly one can say that in the month of February and March also we can see a little rise where it can try to scale towards on the upside. But right now, as long as 77, 78, and in fact beyond that 82 levels in the month of February, as long as these levels are respected, we should not be treating oil as completely bullish, and we should not be treating oil for a complete reversal. Now, specifically, if the prices continues to stay bearish from here, it stays below 67 is the point where you can say that now the energy prices are going to hit the lows at 60, and in fact this time the crash can be further sharper. But let's have a look with the help of indicators. What does the indicators are suggesting here? Indicators do play a major role. Look at the moving averages. Now the prices are just closed in between 50 and 100 period moving average. Now 100 months average, that is almost 10 years oil price is around $70 levels average, and this has come to these levels again. The moving averages have started to converge, but none of the moving averages have crossed over each other, and thus it suggests that the prices are still trading in the bullish zone. Also, if you look at the Bollinger Bands have started to look downwards and almost staying flat. The median of the Bollinger Bands is somewhere here at around 84, 85 levels. These levels become crucial possibly in the coming month. We can see it coming down while the prices might start to climb up. Thus, a possible retracement in the first quarter can be expected. And yes, I will still say oil has still bullishness left, and this could be one of the contributors towards fighting inflation, where the major central banks are still struggling to pull the inflation down. The energy prices from here onwards could add on to this struggle. If you look at the stochastic, this has fallen sharply, looking downwards, while the MAG is still trading bearish. It has converged a bit and again trying to diverge. But there is one more observation here. Look at the first wave, second wave, and I will look forward for it to cross over and continue on the upward journey from the current levels. Thus, the coming month, that is January, February, are going to remain decisive whether the prices are willing to cross over and continue its upward journey. If we do see a crossover and if we do see a bullish momentum in the first 2 to 3 months, certainly you can say that 2024 is the year which is going to see energy prices, specifically crude oil prices, achieving the heights here. RSI looking downwards right now, trying to show slight bearish, and in terms of volume, the volumes are continuously on the diminishing side. Coming to the week, on the weekly charts, yes, we had seen a reversal sign. Post reversal, prices have achieved higher highs, but the last week we have seen the price taking a U-turn. However, right now it is still yielding higher lows. Thus, coming week is going to remain crucial. Any drop below 71 and $70 levels certainly should be a bearish sign that prices are not willing to stay on the upside, and then I will look forward to 68 levels to be breached. Any close order of candle below 68 is where the bears will take over. Now there is another sign here, is a crossover between the 20-50-100 period moving average, which is right now sitting at around 78 to $80 levels. Look at the nearest crossover. This is the bullish crossover, and certainly it has taken a U-turn again in trading bearish. Now, for the coming week, specifically any rise above 74 is a good sign that the prices are taking a U-turn. And if it breaks beyond 78 $80 levels, you can say that we are looking forward to a reversal here. Now, see what has happened. After forming the base, it has risen, seen a good rise, a reversal was seen, then hitting the bottom. Now, I will wait for a reversal from the current levels. That will be the sign that the bulls are taking over. Also, another point to add here on the weekly charts is prices has to stay above this zone 65 to 68. As long as it stays above this zone, you can say that it is still bullish, higher lows are done, and a reversal can be expected. This is very, very important. Stochastic has hit an oversold zone, trying to rise now. Look at MACD. See, after seeing a straight fall, it has formed a triple bottom, retraced, and then started to fall. Now look at the candle size have started to diminish. Good sign for the bulls here. Look at the divergence here. It is still divergent. I will wait for a couple of greener candles, and from here the reversal can be expected. Thus, as I said, as long as 65-67 zone is respected in the coming few weeks, do not treat oil as bearish. We can see a possible bounce back, and then I will look forward for the prices to move above $100 levels in the coming few weeks. Yes, it has still got the bullishness intact. RSI has dropped here. The volumes are very, very low. Coming to the day, on the daily charts here, this was the crossover, bearish cross between the moving averages. Prices were divergent from the moving average. It has created lower lows here. Since then, we have seen it retracing towards the 50 period, and now again looking downwards. However, one must note that as long as it respects 71 and $70 levels, do not treat oil as bearish for the coming week. Yes, specifically for the next week, as long as 70-71 is respected, we can expect prices to bounce back, and then in the month of January, if it stays above 78 levels, you can say that the month of February and March are also going to stay bullish, and we can see a furthermore rise from those levels. What I will be looking forward to, if the price stays above 82, you can say this time it is going to break past 95. This time we can see it staying above 100 as well. Be watching. Right now, it is showing a bearish momentum. Specifically for the next week, look at the daily charts here. If you look at the momentum here, bearish, the last trading candle has been a bearish candle, and it has closed at bottom. A complete reversal is what I will look forward to. It has to open flat and continue on the upside, stay above 72, and then break past 74. These two levels, if it stays above, certainly you can treat that we are looking forward to a reversal, and possibly we can see a good rise. Stochastic has fallen to oversold zone. MACD, now this is important on the daily charts. MACD was trading with divergence. It has converged. Remember, after forming the double bottom, it has converged here. It has not yet crossed over, and it can continue to diverge from the current levels and achieve the highs, which means possibly bullish momentum can be expected as long as it stays in the greener zone. RSI looking down, volumes have also dropped. Now we have seen the charts, we have seen the indicators. Time for me to give you the summary of the observation and give you the trading levels and strategy for the next week, the next month, and coming sessions, specifically first quarter, second quarter, and give you an outlook for the year 2024. But before that, if you want to learn this art of trading, you can join my mentorship batch. 28 batch starts on second week of January. Register yourself now itself. Reach out to me for more details. My Telegram and email IDs are mentioned in the channel and video description. Begin your new year with lots of learning and profitable strategies. Equip yourself with simple tools and strategies which can help you identify profitable trades and trade profitably. Reach out or visit my platform www.forexfunda.com, which has much more. It does give you the economic calendar, the charts, and a vibrant community of traders. Also, you can schedule a call or consultation call with experts, including myself there. So do visit the platform forexfunda.com, and you can be also part of my Signals channel on Telegram, or be a part of my webinar series where every Sunday we take a holistic view and deeper insights I share for indices, commodities, currencies, and volatility index as well. Thus, register for the webinar, which gives you an opportunity to have 2 free consultations with me in a month. Visit the plate forexfunda.com. Now, let's see, looking at the charts, it appears that energy prices have seen a bottom here. Possibility of a reversal exists, but as long as it stays above 65 $67 levels, we can say that crude oil is still bullish, and we can expect a bounce back or rise in prices upwards to $100 levels in the year 2024. And this is going to be a major factor adding to the fights for with inflation, where major economies are struggling, and this could be one of the factors which can definitely add on to the volatility. Now, considering this, I expect the prices to move on the upside. We expect that the major hurdle will be seen at 78, then 82, 85, and then towards 95. If these 3 levels are taken, certainly we are looking at 110 plus levels in the coming few months. Possibly this might happen in the first half of the year, and in fact, these prices can stay upwards in the coming entire year 2024, where the bottom or the lows could be at around 67, 68 at max. With that, for the January month and for the next week, let me give you the trading levels. I will recommend you to buy here at 71.6, wait for it to break past 72, and if it stays above 72 and 72.4 levels, you can say that the bulls will take over from there, and then I will look forward to 73.5 and 74. Now 74 is the next hurdle. If it stays above 74, you can say that the reversal is seen, and we can again look forward to 76, and this time I will be looking forward to 78 and then $80 levels in the month of January. Yes, these levels are very much possible, and achieving those levels is where the bulls will take over. And next few months beyond this, 82.5, 85, and then beyond this, sky is the limit on the upside. For specifically for the month of January, we have to watch out for these 2 levels. If it continues above on the upside, 76 and 78 are going to remain 2 critical levels, which oil needs to break past by in order to confirm the rise. Right now, it is having a downward move. It is looking downwards, and thus only sell entry is below 71, where you can expect 70.6, 70, and 69.5. 4 levels which are going to play a critical role in deciding which direction oil wants to take. Any drop below this zone is where the bears are waiting for. We can look forward to 68.8, 68, and any closure of the candle below 68 is where we can look forward to this time 66.6 and 65 levels. Yes, these are going to play a critical role in deciding the future of energy, and specifically crude oil. 68 is the level you should watch out for. Below this is where the bears are taking. Bears will take over, and a major crash in the prices can be seen below 65. This time in the year 2024, we will look forward to 60, though I am still bullish, and I will look forward for it to break past beyond $100 levels. Thus take your trades accordingly. Like, share, subscribe, and comment. Join my mentorship by Signals channel. Watch the twice a day updates on crude oil. Definitely it will add meaning to your daily decisions, and also the weekly update is equally crucial. These all insights I share in advance in my weekly webinar. Do register for it, and also you can become a channel member. And yes, I wish you and your family a very happy, prosperous year 2024. I wish that all the losses, all the profits may come to you, not the losses. All the losses you have done so far should get recovered in the year 2024, and it is going to be the most prosperous year for you all. With those wishes, Happy New Year. Have a great profitable trading week, month, and a year ahead. Thank you.